Be Wealthy and Smart, episode 1200.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to ask, is the debt deal a head fake? Because this really seems like a manufactured crisis to me. Over the long weekend, we had news that an agreement had been reached on the debt ceiling, and yet today there is a lot of backtracking, and now we're hearing they're not agreeing. That's no surprise to me because it seemed like things were boosting the stock market on all this good news when there was a lot of bad news just waiting off on the sidelines to be brought back in as the main event. It just really feels like this is all a setup to me. When we look at the stock market, only 7 of the largest mega cap stocks have been responsible for 90% of the stock market's performance. So these 7 stocks are basically responsible for the S&P being up at all. And when you look at the tech portion of the S&P 500, that sector is now 27% of the S&P 500, which rivals where it was during the year 2000 during the tech bubble peak. That tells me there's a lot of speculation in the market, and it feels like bots have run up the tech stocks, and they may drop them in the future. If or when the debt ceiling talks break down, that provides a convenient time for the professionals to short the market and make quick profits, which they make much more money on the downside than they do on the upside. And it fits right in with my time horizon of June, which I've said is when I see weakness coming in the market. Now, we haven't heard about bank stocks for a while, but we still have bank stocks that are having problems. We have small and medium-sized banks where people have been moving their money and moving it over into the large banks. So those stocks may see their earnings decline, and we may see the stock performance of those bank stocks decline. Now, I've been bullish since October and told you that was a good buying opportunity, and the market looks very bullish, and we had too many bears, and the news was too terrible. It wasn't really that bad. That things were better than what the media was telling us, and I've been right on that. But right now, I just feel like we're being set up for a quick sharp drop in the market in June. However, I do want to make the point that I'm still bullish for the year, and I do think the market will end up double digits this year. And that's why I did the podcast about why, even if we have a sharp drop, I'm still not recommending that you try to time this or do any market timing. That's very difficult to do successfully. What I'd rather see you do is think about using a sharp drop as a dip to purchase, and maybe wait and not run into the market right now with all this craziness and speculation and narrowness of only a few stocks that are actually doing well. Rather than chasing them, wait for the market to come to you and then buy on weakness. Or as I like to say, buy the dips. Now, in addition to stocks, we have crypto running like crazy, and XRP has been going up sharply in the last day or two on rumors of possible settlement with the SEC or a decision by the judge. I did a video on that. If you want to hear just about XRP and what's going on, that's over on my YouTube channel at Linda P. Jones. But right now, XRP is up 7.5% in the last 24 hours to about 52 cents. So apparently the next step is for the House and the Senate to vote on June 5th. So in June, we'll see if this debt ceiling agreement passes. My guess is something's going to go terribly wrong, and it won't. And we'll have a manufactured crisis in all of its full glory. We'll see how that turns out, but it just feels like this is very manipulated, very planned, very predictable in terms of this has happened before. I've seen this pattern before where they run up the market on good news. They jack up just a few stocks that take the whole market up, try to get everybody in to follow behind it, only to see the market reverse and the shorts make a lot of money on the downside in an unexpected sharp drop. That's why it pays to be a long-term investor. These kinds of moves come and go. Any drop that we have, we're going to see a rebound. And like I said, we will have double-digit returns by the end of this year. So we will rebound. I'm just pointing out the shenanigans that go on and the silliness of some of the manipulation of the news to drive investors to do certain things emotionally. So we want to take the emotion out of investing. We want to take out the euphoria. We want to take out the panic. We want to take out the fear and greed and invest for the long term. And if you have some cash available on the sidelines, that's when you have an opportunity to take advantage of a dip and actually come in and buy at some bargain prices. So it looks like Monday they'll have the vote, and we'll see how this all turns out. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.